What you need to know about home appraisals. I'm Bryon Howard, and this is Josh Tagg.
Hello, hello.
Josh, nice to see you again. Hey, we thought we'd have a little conversation around home appraisals as we're heading into this market here in Calgary. It's a market that seems to be very busy with low inventory and prices continuing to rise. We want to talk about home appraisals. What are your thoughts on home appraisals?
Well, home appraisals are something that we do see needed in several applications for the mortgage. Obviously, I'm looking at it from that angle. It's not always needed, but when it is needed, there's a lot that the lender's looking for within that. Sometimes it's just value, and sometimes it's other things.
Mm-hmm. So often when a buyers, we find buyers are, they understand getting pre-approved.
Yeah.
Whether or not that really exists, but a pre-approval is an important first step in home buying. So then they look at a few properties, and then they start to get a sense of what they want and what prices are, and then they ended up writing an offer and getting an accepted offer on a home. And they've already had some talking with a lender like yourself, and now the next step is getting the lender, the bank, in quotation marks, the bank, to say yes to what they want to buy. But then we sometimes see a problem with the bank saying yes. This is called the home appraisal. What kind of problems do you see sometimes, Josh, in this home appraisal situation?
Brian, in most cases, the most likely area that an appraisal is going to cause a problem with respect to the mortgage lending is if the value can't be supported or represented by other sales in the community or other similar homes that have sold recently. So, when we think about appraisals, usually the main thing we think about is this is something that's going to tell us the value of a home. In an increasing market, it's possible that if there were many offers on a house, perhaps the reason your offer gets accepted is because you're willing to spend just that much more than everybody else. But it could be that the amount you're willing to spend on the home, while totally legal and totally legitimate, isn't reflected in other recent sales of similar homes in the neighborhood or in the area. And so that can be a problem. Some of my colleagues in Toronto that for many years had a lot of years of increasing values year over year and month over month, there were bidding wars all of the time. And sometimes people would make an offer on a home knowing that it actually wasn't worth that yet, but expecting that it would be worth that maybe in 60 or 90 days. So, they set a possession date out. And in some cases, brokers and banks were just waiting a little while before doing the appraisal. We haven't really had to do that in Calgary, thankfully, because that is a risky move. Because when we're looking at appraisals that are for the purpose of a mortgage, if the value comes in less than you're trying to pay for at the house, the amount that you can borrow against the home is always going to be based on the lesser of the appraised value or the price that you're paying. So you would have to actually pay additional down payment in order to close on the home in the case of an appraisal coming in late. So it is for the purpose of value primarily. That's usually what we think about. And if it is going to cause a problem, more often than not, it's going to be in the area of value simply because there haven't been enough sales in the area of similar homes to support how much you're willing to spend for that home.
Right. So on appraisals, when you get an offer, I mean, sometimes we can even have multiple offers on a property, that are very similar, like sort of driving up the price or whatever on a home. But at the same time, we've had 3 buyers, possibly 6 buyers on a recent Fairview property here in Calgary that was listed under $400,000, 50 offers. The property sold for like over 600. And so I think that property will probably appraise okay. But in some cases, and buyers are willing to pay that price for it. So you would think that is the value. But again, the bank doesn't, or the lender doesn't necessarily agree with that. What are some cases where you see that appraisals aren't coming in? Not only around value, but, we talked a little bit about maybe square footage or condition.
Yeah, for sure, Brian. Of course, like we already said, the value certainly matters, and that's the primary thing that the lender's going to be looking for. But the lender cares more than just what the value of a home is. They care that it's a home that if everything went sideways with your mortgage and they had to take over that property, is this a home that they want to have in their portfolio and have to deal with to try to sell down the road? So one of the other things that is in the appraisal is there's a scale for determining, or for a judgment call by the appraiser, as to what the condition of the home is. As a general rule, it goes from fair to, I guess, poor to fair to average to good and to excellent, or something along those lines.
Mhm.
It's the fair, average, and good that I see the most. And really, that fair or poor is even worse than fair. Those are down low enough that typically a lender's not going to be particularly interested in that home. It could be that it was all damaged. It could be that the previous owners decided to do some renovations and ran out of money, or something changed in their life and they decided that selling is what they're going to do. But if you're trying to buy a house that has no kitchen in it and it's in rough shape, that's a problem for most banks or lenders that are going to do financing. And if that is the condition, then we'd really have to be looking at alternate types of lenders, often private investor groups, to do that kind of financing until the home's in a position and a condition that a mainstream A-type bank lender would be open to taking over. So property condition is one of the big ones that is important, and
Mhm.
I have seen it cause a problem and cause an approval to be canceled.
Another place I've seen it is square footage. So, for example, in a place like Calgary, inner city Calgary, you can buy a 1914 home, like on a little smaller street in sort of central Calgary, that is only like less than 700 square feet. So I've seen lenders say no to those kind of properties in the past.
Then, that's true as well, Brian. Most lenders have a certain minimum square footage. Truthfully, for a detached home with a basement, they
Hmm.
still want to see it. I want to say 800 or 900 square feet as the minimum. If there's no basement, they want even larger, because the basement does provide living space in most cases. So if the property is too small, yeah, that's going to be a problem. And we also know that in modern living, the expectations for the spaces within a home are different than what was there 100 years ago, right?
Hmm.
So it could be that what they're looking at is a really old home that maybe even has old wiring, old plumbing, maybe asbestos, and other things that are suggestive that perhaps the best use of that property is to take the land value itself. The structure may have no value whatsoever. And if the structure has no value, a lender is going to be less inclined to want to lend against that home. So often we may see the highest and best use of a certain home in a certain neighborhood, maybe a neighborhood that's prime for gentrification. We may occasionally see that the highest and best use of a property is for it to be torn down and have a new structure, often an infill, or maybe a couple properties side by side, something more multifamily. The best use might be something other than a single family home that it currently is. We don't see that often, but it certainly does happen. It happens in small towns, sometimes because the zoning has changed over to commercial zoning. We do see that in a few old homes, even inner city Calgary, where the zoning has shifted. And so a
Hmm.
lender doing a residential mortgage isn't going to want to lend against that home for your family to move into in many cases, because if it's zoned commercial, if you want to make upgrades or adjustments to that home down the road with the zoning, the city may not let you do that because they want it to be used for commercial purposes. And so that impacts the ability of a residential mortgage lender to be able to handle issues with that mortgage and that property down the road.
Hmm. And it's not. Actually, we should say that 680 square foot single family detached home with a basement, for example, that one lender says no to, another lender might say yes. Like yourself, you have access, I think, Josh, to like 100 different types of financing versus a single bank. So if the bank, the RBC, for example, or the Scotia Bank says no, we're not lending on this, there are alternatives. And often with a little digging and a great mortgage broker like yourself, we can find financing for that funny home. funny home, I should say.
That is true. We can find financing for them, but it might not be the financing that a typical buyer is going to want. So that
Exactly.
is really a conversation to be had with any prospective buyers. What are you looking for? And is what you're looking for something that's going to work for the mainstream lenders that are going to offer the rates that you're going to want to have, right? So we don't run into it very often. But if that's something that a particular buyer is looking for, we need to make sure we have those conversations before they're making offers on a home. So we can kind of pre-check with a lender to see if they're okay with that home. And if they're not, do we have to step into the commercial lending space because of the zoning or best use of the property?
Josh, any last minute thoughts on a seller or a buyer and how helping them understand a home appraisal? Most sellers, most buyers only buy 2 or 3 properties in their lifetime. So when an appraisal doesn't work for the buyer, the buyer wants to buy the property at X price, and the appraiser and the bank says, "No, I'm not giving you the money. That money, I can give you this much money." What can happen? What have you seen?
So it sounds like what you're asking about is what happens when the appraisal comes in low. You know, if
Right.
somebody's putting, say, a 10% down payment and the appraisal is less than what they're willing to pay, maybe we can restructure that loan as a 5% down payment based on the lower price, even though they still put the same total down payment based on the actual purchase price. If they're doing 20% down, maybe we redo it at 10 or 15% down payment. So they're still getting the same amount of money. Their down payment is still the same in actual dollars, but the way it's structured for the purpose of the lender is the loan is compared to the appraised value instead of the purchase price. So it's not that a file can't work, but there has to be adequate equity in the home based on the appraised value of the home if that ends up being less than the actual purchase price.
Great. Well, Josh, this has been enlightening for me as always. I appreciate talking to you. Thanks so much.
You're very welcome, and thank you as well.